There's a man in Ohio who's worth $4.2 million. He drives a 12-year-old Honda Accord with a cracked windshield he never bothered to fix. He clips coupons. He packs his own lunch. And every single person who meets him assumes he's barely scraping by. He's not poor. He's the opposite. And the thing that made him rich isn't a secret stock tip or a lucky break. It's what he stopped buying years before he became wealthy. Today we're breaking down the 5 things wealthy retirees quietly stopped spending money on, because what they cut out is just as important as what they invested in. Stay with me because number 3 is the one almost nobody talks about. The number 1 thing is the new car, every few years. Let's start with the most expensive habit in America, the brand new car. Picture this. A man named Russell, 34 years old, drives off the lot in a shiny new SUV, $68,000. He feels like he's made it. 3 years later, he trades it in for another one, then another. By the time he's 55, he spent over $300,000 on cars that are worth a fraction of that today. Here's the number that should haunt you. A new car loses roughly 20% of its value the moment you drive it off the lot, and almost 60% within the first 5 years. Now picture a different man. Same income, same era. He buys a 3-year-old sedan, drives it for 12 years, and invests the difference, roughly $700 a month, into an index fund. By retirement, that boring choice is worth over $280,000. Wealthy retirees didn't stop driving. They stopped buying depreciation. They let other people pay the premium for new and quietly built wealth with what was left over. By the way, if this is landing for you, subscribe. The algorithm doesn't push videos that challenge how people think about money unless viewers actively tell it to. Let's talk about number 2, the bigger house. Next, the house upgrade. This is the one that gets people, because it doesn't feel reckless, it feels like success. You get a raise, and suddenly a bigger house feels deserved. Meet Carol, 42 years old, gets promoted. Within a year, she and her husband move from a comfortable $280,000 home into a $620,000 dream house. Bigger mortgage, higher property taxes, a pool they use 4 times a year, and without even noticing, their monthly housing cost doubles. 10 years later, their retirement savings are thin. The house is beautiful, their bank account is not. Now meet retirees who actually built wealth. Most of them stayed in modest homes, sometimes the same home for decades, even as their income grew. They didn't upsize their walls. They upsized their investment accounts. The house was never the goal. It was the distraction that looked like the goal. Number 3 thing is the safe insurance product everyone pushed on them. Here's the one almost nobody talks about. Whole life insurance and high-fee annuities sold as guaranteed wealth-building tools. In his 30s, a man named David was approached by a friend, a financial advisor, who sold him on a whole life policy. It builds cash value. It's safe. It's an investment and insurance. It sounded smart. It sounded responsible. What David didn't realize, he was paying fees of 1% to 3% every year, on top of premiums that were 5 to 10 times more expensive than simple term life insurance for decades. When he finally sat down with the numbers in his 50s, he realized something brutal. If he'd bought a cheap term policy instead and invested the difference, he would have had well over $150,000 more by retirement. Wealthy retirees, again and again, made the unglamorous choice: term life insurance to protect their family, separate, low-fee investing to build wealth. They stopped paying for products that bundled safety with hidden, expensive fees and let their money grow where it actually could. If this video is giving value, hit the subscribe button. Number 4 thing is the hot stock tip / the lottery ticket mentality. Next, the dream of the quick win. Everyone has a friend, an uncle, a coworker, somebody who knows a guy with the next big stock, the meme stock, the crypto coin about to explode. The lottery ticket bought every single week, just in case. A woman named Patricia spent $20 a week on lottery tickets for almost 30 years. That's over $31,000 gone, on odds stacked impossibly against her. Wealthy retirees largely stopped chasing the lucky break. Not because they got lucky once and quit, but because they understood something simple. Consistent, boring investing beats lottery-style bets almost every single time. No hot tip. No headline stock. Just decades of steady contributions to ordinary index funds, left alone to compound. The lottery ticket sells a dream. Compound interest delivers a result. The number 5 thing is, things bought to impress people they didn't even like. And finally, the most quietly expensive habit of all, spending to look successful, for people whose opinion never actually mattered. The designer bag bought to keep up at the school pickup line. The luxury watch bought before a high school reunion. The bigger vacation, posted online, paid for with a credit card balance that took 8 months to pay off. Wealthy retirees almost universally stopped funding other people's perception of them. They spent on what made their life better and let the rest go quiet. The truth is, none of this is about deprivation. It's about direction. Every dollar wealthy retirees didn't spend on depreciating cars, oversized homes, hidden fee products, lottery odds, and other people's opinions went somewhere else. It went into accounts that grew quietly, for decades, while nobody was watching. If this video showed you something you needed to see, subscribe. Every week, we break down the money habits that actually build wealth. Smart money, real freedom.